Most people who invest in crypto do so as individuals, and adding crypto onto a company's balance sheet is quite different, with many people not really understanding this. So I wanted to put together some videos for you looking at holding crypto through a company rather than as an individual investor. For example, looking at what the implications are, the rules, the advantages and the disadvantages of this. And I'm really pleased to be able to welcome on this video Joe David, who's the CEO and founder of one of the leading crypto accountancy firms in Myna, which is part of Nephos Group, a wider professional services business that offers tax, accountancy, wealth management, restructuring, offshoring services, etc. And it's great to have Joe here to share his expertise with you. If you are interested in getting specific crypto tax advice or any of the services that I mentioned based on your personal circumstances from one of the best crypto accounting firms around, then I've included a link in the description to this video to contact Joe or Jamie at Myna or Nephos directly. You just need to make sure you put my name and YouTube channel in the online inquiry form, just so they know where you've come from. So please do like this video and subscribe to the channel so I can continue to offer more content for you in future. Just a reminder that nothing contained here is financial or tax advice. And let's jump straight in. Hi Joe, it's lovely to see you. I think it's been about 3 months since you jumped on our first Q&A video with Jamie. You introduced yourself, introduced Myna, Nephos, what you do, everything like that. I just want to say thank you. It's an absolute pleasure to have you back on. Thank you for coming to share your expertise and your knowledge with all of the viewers. I think it's amazing. Perhaps you want to just spend maybe a minute just introducing yourself again, just in case anyone missed that first video.
Yeah, for sure. And thanks, James, for having me and for supporting what we do as well, and also giving people, the listeners the opportunity to hear some of this really important stuff as well. So yeah, thank you to you. I'm Joe. I'm the founder of the Nephos Group. Nephos is a full service professional services company. We have a broad range of services: accounting, tax, wealth management, corporate structuring, and we have an international arm as well. One of our biggest areas of clients, as you well know, and I'm sure many of your listeners do, is the crypto market. We have probably one of the largest, if not the largest, tax practice in the UK, focusing on crypto investors. And we also work with around 150 companies globally who are crypto based in one way or shape or form. So that might be that they are a service provider accepting crypto, or it might be that they are a layer one protocol themselves and they need the accounting for that. So it's a total range from some basic stuff to some more complex stuff. I've been running the business for around 12 years. And a personal passion for crypto and the blockchain space, and just really excited to be able to share our knowledge and hopefully help your listeners and viewers to make some decisions on their own kind of situations.
Yeah, no, definitely. I just want to say thank you again. We've had a lot of people contact myself, yourself, Jamie, on the individual kind of crypto investment level.
Yeah.
For people just investing into crypto, ranging up to people who are looking for wealth management type advice. So yeah, just a really big thank you. I would just like to say, I've said it in the intro, but as you're here, obviously this is a discussion, it's education. So it's not financial tax advice. If you are looking for specific advice, I would just say, just contact Joe, contact Jamie at Myna, at Nephos, and they'll be able to give you that advice there.
Yeah, and I'll be caveating that with everything I say anyway. So
let's jump in, because I think it's fair to say most people in crypto are individual investors and they hold it as an individual. Why would somebody add crypto to a limited company, for example? Maybe add it onto the balance sheet or incorporate to do that. What are some of the benefits, would you say, of doing that?
And I think they are wide ranging, and I think individual people will have different reasons for wanting to do this or whatnot. And let's take somebody that currently invests in crypto as an individual. They may want to look at a tax planning opportunity. So that might be that in some circumstances it's a more tax efficient thing for them to do, to hold that crypto investment within a company vehicle rather than in their own name. So that's one reason, and we'll go into that specific point in a bit more detail shortly. You might be a business with surplus cash. And you might say, we've got some cash lying around. We invest some of that in the market, but actually, we maybe want to diversify that. So we want some higher risk stuff, maybe with some lower risk stuff, or we want to not too high risk, but so we want something like Bitcoin because it's fairly blue chip, and you could argue in the grand scheme of things is more stable than others. It could also be international payment flows. It is quicker, cheaper, easier to use stable coins, Bitcoin, just to send money around the world. So it might be that you have people around the world that you want to send money to. So they're the kind of the first three that come to mind. I think there's a few others. Hedge against inflation. We've spoken about that before. We've actually seen, I mean, I say this week as in physical, but when this goes out, it'll probably be a couple of weeks previous. But the Fed in the US, reducing interest rates, and that's increased, if you like, liquidity around, and therefore people are willing to put more money into crypto. So it might be that people want to hedge against inflation or future interest rate changes, or that kind of capital market situation. And then lastly, I would say flexible opportunities in the market. So we now have things like DeFi where it's more of a kind of trustless, permissionless system to lend money, borrow money, move money around. So I think there's multiple reasons, but I think most of the time people start with diversification of their cash assets, or maybe there's some tax planning opportunities there as well.
Yeah, no, definitely, because you've got a company that can invest in like funds and trusts and bonds and pensions, stocks, commodities. I can't think of any more.
Yeah.
But yeah, you're adding crypto to that list to diversify. So that's
Yeah.
perfect.
I think, if you look at most kind of, especially small business retail banking solutions, they now give you the opportunity to get in kind of like a basic kind of money market type fund. So, where you're effectively investing your cash. And there's a very, very minimal risk, and you might get 4 or 5%, depending on where the numbers are, as return on sticking that cash in a pot. So if you've got 100, 200 grand in the business, and you don't need it in the immediate term, then maybe you want to say, well, we'll put 100 in that. I'm using a very broad example here, 100 in that money market fund that we've got, and earn a basic yield on that that's fairly safe. We can get it whenever we want, and then we put the other half into a crypto opportunity, or you put half of that half into crypto and the other half into the stock market, or so it just adds an extra, I guess, flavor to the mix of what you're doing.
Yeah, no, definitely. Generally speaking, do you see, and this is general, not advice, but do you see things moving in a way that it might become easier to kind of add crypto to a balance sheet? So I was thinking more, for example, in the UK, on the 11th of September, they've introduced a bill into Parliament, which is where they're now seeing crypto as personal property and things like that.
Yeah.
Are you seeing it more going down that route? Or
I think when you talk about whether it's easy or difficult to invest in crypto through a company, I guess that depends on your, and I mean this politely, but your kind of technical skill set. Because from my perspective, and probably for you, I find it quite easy to, because I know I can hold it in a self-custody wallet, or anything kind of like that. I think if you want a corporate exchange, because you don't know how to use the kind of DeFi markets or the kind of self-custodial side of things, then maybe that at the moment limits your options, because there are only a couple of exchanges that are actually authorized by the FCA, and they have limited tokens on them potentially, so then your options are limited. So I think the more crypto becomes a bigger, kind of more mainstream, I hate talking about it as a mainstream thing, but like the more it becomes that more popular, more governments around the world are recognizing it, then it is going to be easier for people to invest in crypto and diversify their assets than it is right now.
yeah, no, I think I agree. I see it going along that route, which has its upsides and downsides. If you're
Yeah.
into DeFi and you're into that kind of side of crypto, then you don't really see the benefit of that. But
that's why I don't like the word mainstream, because as a kind of crypto nerd myself, and I've been in the space for over 6 years now, and part of the reason why I love the space and why I got into it was that kind of trustless, permissionless, decentralized, kind of nature of what we do. And the more mainstream it comes, the more regulated it becomes, the more normal it becomes in terms of like, how you operate with these systems. And that in itself takes away a lot of those benefits that I joined the ecosystem, and I know many people join the ecosystem for. So yeah, well, it's a real balance, and slightly off topic, but there's a real balance of how do we get mainstream adoption in a sense, and also maintain the core values of what we're trying to achieve with the ecosystem. And yeah, I don't think anyone knows the answer, and yeah, it's certainly going to be a challenge as things grow.
Yeah, definitely, because you're getting these large centralized custodians in crypto now that you look at. There's a lot of them now, really.
Yeah, and some of the banks, I sat down with a private bank out here in Dubai last week, and they, I won't name them, but they're a large private bank. People would be aware of them, and he was talking to me about how they can custody crypto, and you can have within their platform, you can kind of it's a private bank, so it's not a transactional as such, but you can kind of have your bank account, you can have your stock market funds, you can have your crypto assets now held in there as well. So and then you can potentially leverage against that, because they're holding all these under their custody. And so, there are benefits, but now we're talking about a bank, which a lot of people went into crypto to avoid the bank. And now we're talking about a bank custody and that thing that you got into because you wanted to avoid the people that are now custodying it, and that's the dilemma, if you like, of how do you manage that?
Yeah, 100%. If we come back to the company side, just in terms of the tax, so what tax would a company, like a limited company, pay when they're transacting with crypto? So whatever it might be in crypto, because I don't think HMRC, I don't think see crypto as money in the same way. So is it capital gains tax? Is it corporation tax?
Yeah, so as a business, corporation tax and capital gains tax effectively are the same thing. That they're not, but they are, if that makes sense. So they're all taxed under the corporation tax regime. So it's the same rates as corporation tax. Slightly different calculation as to how you get to the figure, which is why I said they're the same but different. But it's the same rates. Whereas in the individual perspective, as you've gone through with Jamie many times, you have income tax rates and you have capital gains tax rates, and they are different, although that may change. Whereas in the company, they combine those, if you like, together. So at the moment, at time of recording this video, base rate of corporation tax is 19%. And the higher rate, if your profits go over £250,000, is up to 25%. There is a complicated marginal rate in the middle, which we won't go into, but that's the current rates, if you like, under corporation tax.
And then capital gains tax, you obviously...
Yeah, so as an individual, capital gains tax is up to 20% if you're a higher payer as an individual. So there is potentially that discrepancy then between what you pay at corporation tax rates in a business versus what you pay as an individual. So then it comes down to a decision around a few different factors, and one of those being, what other things am I doing with my crypto? So if you're staking your crypto, as an example, or you're earning a yield from your crypto as an individual, that will be taxed under income tax rates, which could be as high as 45%. As a company, it will be taxed under corporation tax, as mentioned a minute ago. So that then becomes a 25% position rather than a 45% position. So, the conversations we have with people are always around this. What are your intentions? What are you trying to do? What do you, is it literally a case of, I'm going to buy, sell, buy, sell, buy, sell, buy, sell? Then maybe actually it's not as relevant to hold it in a company. But if you are going to hold it long term and invest it back in for a yield, maybe there is an opportunity there for the company to be a better situation.
Oh, okay, yeah. So that is very much about contacting you and going through your specific example. Because if you're looking at it as probably from my level, which was maybe a beginner's level if you want, but if you're making significant gains, and obviously it's got to be significant if you're looking at, was it 250,000? I think it is, isn't it?
Yeah, I think that's something. Yeah.
Corporation tax at 25%. So they're significant gains. But if you make that, then that just at that level, it's better to pay 20% capital gains tax than it is 25% corporation tax. But that's a very basic example, as you've just explained.
Yeah, and that's the situation for a lot of people, right? It's just weighing up that situation of what works for them. And as we just said, if you're holding, I don't know, £25,000 worth of crypto, then is it worth you looking at incorporating that? The CGT rates at that level are around 10%, I think, at the time of doing this. So actually, that's not a huge burden on somebody. But if you are at that higher rate, or you are generating a fairly, high yield from that, then I absolutely think that there's a conversation to be had around, around a company being a vehicle to, and that's where, like we said at the start, that's where the tax planning comes in, right? Is we have that conversation, and this is not a crypto conversation, but it's not just in crypto. We have those conversations with individuals all day, every day around crypto, but also non-crypto assets, and when is the right time for that asset to be incorporated into a company, and when is the right time for that asset to stay as an individual. So the other thing, just to clarify, which is very small these days, it used to be a lot higher, but you don't get the same personal CGT rate. So the 3,000 that it is now used to be a lot higher, obviously. So the gap was bigger. You don't get that as a company. So there's another slight, I guess, benefit on the personal side. So it's just worth noting that as well.
Oh, that's really interesting. Yeah, so the AEA of 3,000 that was 6,000 that was 12,000.
Yeah.
You don't get that as a, yeah, that's really interesting. Yeah. It's also quite complex, based on what you've just said. If we touch on that caveat, and that caveat is what we were discussing before the video, really, which was the autumn budget.
Yes.
You just want
Yes.
to touch on that a little bit.
Yeah. Yeah, we've got something coming up, as I'm sure people are aware, in October, and I think the government have already come out and said that we need to be prepared for some pain. It's very clear what that means. So yeah, we are expecting tax rises. We don't know exactly what they'll be and what form they'll come in, but the rumors are that things like CGT could match income tax rates potentially, so or at least get closer to it. And there's also talk of a potential exit tax if people decide to leave the UK and set up shop somewhere else where maybe the tax rules are more kind of effective or what have you. So yeah, so there's a big caveat around that. And the issue we've got is the risk we are finding at the moment, and some of this is my opinion, not fact, is that if they raise those rates significantly, so let's say they take 20% up to 40%, it's extremely unlikely that they're going to give people any time to do something about that, if that makes sense. So quite often when they go, income tax is going from 20% to 21%, they say it'll happen next April, and nobody really cares because it's 1%, it doesn't make a huge amount of difference. In this case, if they're going to do such a huge kind of big situation, it's going to be extremely likely that they go, don't worry, guys, you've got until next April to shift all your stuff into another format so that you don't have to pay these crazy rates that we've just given you. It's more likely that they're going to say this is going to come in as of now or as of tomorrow morning or something like that. So again, we don't know. It may not happen like that, but if it does, your time to do something is going to be very limited. So what I would say is if you are in a position where you're concerned about the potential increases in those rates, that do get in touch with us or even your own accountant, if you have one, ASAP, because it may be that there's some things you can do now which will be a bit of a hedge against what that happens. Now, it might be you spend a few £100 doing something that ends up not being that beneficial because the rates don't change or there's more time to deal with it. So that's a personal decision that somebody needs to make, but there is this possibility. And so we're just saying to people, think ahead, think about planning. And if you want to hedge, then there are some things that we can talk about that may possibly help you hedge against that.
Oh, that's amazing. Thank you so much. That's covered, I think, every base there. Yeah, like because we're talking about adding crypto onto a company in this video, I suppose just thinking off the top of my head, again, it's not advice, but it's if I were an individual investor and I invest in crypto and I think that the capital gains tax, if we're going into a huge bull market in the future, and then I think that it might go 20% to 40%, that's a significant increase. So it's hedging what's the likeliness of that happening, and no one knows, versus should I put, I don't know, 50% of that into a company and hedge against that risk? And that's what Joe, I think, was talking about.
Yeah, 100%. And that's the situation, right? Is nobody knows, as you just said, So, we spoke to somebody who has a particular asset that they hope during the course of the next 12 months will see significant gains. If that's the case, the conversation with that person is, do you want to wait and potentially pay these other numbers? Or do you want to say, well, actually, maybe I'll put half of what I've got into a different structure and I'll leave the other half over here. So now we've hedged, and it's the same way you might hedge against foreign currency risk, or when you go on holiday, you might take cash in the currency because it's cheaper to exchange it at the exchange booths or whatever they're called, versus using your UK debit card abroad because it costs more. It's exactly the same process. You're saying, I want to make a plan today which I think will benefit me in a future situation, and it's exactly the same here, just maybe on a slightly kind of bigger scale.
Yeah, definitely. If that does apply to you and you want to get in contact with Joe or Jamie, Myna, Nephos, there is a link in the description. So please just jump into that description. Just put my name in the channel so they know where you've come from, and you can have that conversation with them. And I think it will take it from there. Based on your personal circumstances, really. If we continue that train of thought from earlier a little bit, if you're looking at corporation tax, I presume then you're adding crypto into that company. You then have to factor in, obviously, if you want to use that yourself as an individual, dividend tax or a director's loan or something, so you've got tax on that as well.
Yeah, 100%. So, there's a couple of points, I guess, to that switch between individual then to company. The first is, and this is a very specific situation, I would say. So again, this is a conversation we would have with somebody, but there's a potential of a disposal, obviously, from you into the company. Limited companies are a separate legal entity to the shareholders and directors that represent it. So what that technically means is even if you own that company 100%, if you are sending your crypto to that company, you are effectively disposing that to another legal person, as HMRC would define it. So that's very important to know, because that could be a disposal. Again, maybe a good time to do that, depending on your thoughts on the market, may not. So that's one thing to consider. And then, like you say, the second point there is then, well, if I'm disposing of this into the company, what am I going to do with it when it's in the company? Am I then going to say, well, okay, I've got $100,000 of Bitcoin, and when it gets to a 200,000 portfolio, I'm going to take half of that out? As you said, you've got the 100,000 gain, corporation tax rates, and then the potential also of a withdrawal from the company, and then potential dividend tax or some kind of tax, depending on how we structure that, for you to get the money out of the company. So yeah, there is that potential double whammy. And, again, it comes back to when I talk to people about their individual situations, what is your intention? What are you trying to do? Look, we all don't know what's going to happen in the future, but what is our intention? If our intention is to do this, then potentially that is the right route. If the intention is that every time I generate some funds, I want to strip every single penny back out, then typically it can become more expensive to do it through a company, because you end up paying that kind of, it's not double tax as such, but you kind of pay a tax and a half or something like that maybe. So it is something to definitely be considered. There is also, without getting too complex, there is also the potential that if you dispose of those assets and then you add those assets to your company, you've effectively given them to the company, let's say. So the company then owes you that money. So then there is a potential that you can draw back against that tax-free, because if you loan money to your company, as you mentioned a second ago in the intro to the question, a director's loan, a loan from a director into the company, you are entitled to take that money back tax-free, because it was, kind of already taxed money that you put in. So yeah, there are a few nuances around those little bits and pieces that, like you say, we would have those conversations with people, and it just depends on that outlook and what you're trying to achieve.
Yeah, that's great. I think it's just very similar, isn't it? I mean, if you're looking at, for example, purchasing a property,
yeah,
and it's the same conversation, isn't it? Are you purchasing that as a second property you're talking about, but as an individual, or are you going to purchase that through a company, and it's the same kind of
absolutely.
Conversation in terms
And
of
again,
your
what's your
income?
intention? Is your intention a short-term flip on that, or is your intention long-term income? What's your other income position? If your other income position is you've got a job that earns you 200 grand a year, then actually that income that comes in from that property is going to be taxed pretty heavily. If the job that you've got pays you 10 grand a year, then maybe actually it is still worth keeping it, even if your long-term intention is to keep it as a rental. So yeah, it's that exact thing, is we need to look at it holistically, and as boring as that sounds, but we need to look at the whole thing and go, what are you trying to do? What's going on? And how can we fit that best for you.
Yeah, definitely. And you touched on disposals. I think that's a great thing to just mention, that if you are an individual that holds crypto and then you want to incorporate, or you've already got a limited company, you want to add that into the company, as an individual, you have to dispose of it.
Yes.
Is that correct?
Yeah. So because you are effectively transferring it to another legal entity, you are disposing of it and you are then acquiring it. Yeah. So it is a taxable disposal, potentially, again, depending on all the different bits and pieces. So it is worth considering that 100%.
Yeah. Because I'm just thinking, again, it depends on all of the individual details, but you've then got to factor in the cost of then incorporation, because it's also timing, isn't it? Because you might have a capital gains tax bill on top of the kind of cost of incorporation or whatever you have as part of that equation. So
yeah, and again, that depends on where you sit, right? Because if you bought Bitcoin 3 months ago when it was 60 odd K or whatever, and you're now sitting on a position, you're probably on a loss on that particular transaction. So actually, there could be a good opportunity to dispose of that today in your own name, and realize that loss, and then buy that same asset back in the company pretty much straight away. Two separate legal entities. Bed and breakfast doesn't apply because it's not you personally buying it, and actually then you've crystallized the potential loss. If you've got other income, other property income, or you sell other assets, you might be able to then utilize that loss against those. So there's huge planning opportunities across the board. But if you bought Bitcoin at $10 and you're now sitting on huge profits, maybe there's a different conversation on how we need to handle that.
Wow, that's amazing. Just maybe just explain to anybody that doesn't know what bed and breakfasting is.
Yeah, I'm probably not the greatest at explaining that these days. But effectively, it's a rule that they put in place to effectively avoid people kind of like locking tax loss harvesting, if you like. So basically saying, look, you can't sell it at a massive loss today, buy it back 10 minutes later, realize this huge loss, and then still hold the asset at the kind of the price that you want it, or similarly realize a gain and have a higher base cost for a potential future increase and stuff. So effectively what they say is that if you buy it back within 30 days, it basically nils off that gain or loss to as if it never happened, as it were. So that's kind of the rule, which is actually some people, I was talking about this on a conversation with, or some people were talking about it on a conversation on Telegram earlier, where people say, well, I can't, this is flipping this now to bed and breakfast being a benefit rather than a potential downside. If you are using crypto to buy a sandwich, or to buy a pint at the pub, or whatever it may be, people go, well, why would I do that? Because now I'm realizing a gain. But the benefit to the bed and breakfast then becomes, well, if you want to use it because you want to be somebody that only lives their life spending Bitcoin, or whatever, if you buy that back effective immediately, you actually then can spend your Bitcoin with actually no capital gains liability whatsoever. Now that's a very broad no capital gains statement, but the point there is actually there are ways that you can use crypto, Bitcoin, whatever, in your day-to-day life, and actually benefit from that bed and breakfast thing by saying, well, I'm going to use it, but then I'm going to buy it straight back, so I'm going to negate that gain or loss, and therefore I'm actually contributing to the Bitcoin ecosystem. So that's just a little kind of caveat, well, not caveat, sorry, but like off-topic point there on the bed and breakfast that I saw on a chat earlier.
Well, that's amazing. Yeah, I hadn't thought about that. That is also something that we talked about in the individual crypto. So we talked about bed and breakfasting.
Yeah, Jamie's the man for that.
Yeah, section 104 pooling and all that kind of all that kind of stuff. But yeah, thank you for that. Just to explain it to people.
So that ends this video on holding crypto as a company rather than as an individual, and hopefully that's helped. But do look out for the other video as part of this series, where I asked Joe some more questions. It certainly is a bit of a minefield, quite stressful and certainly complex, knowing exactly what to do to minimize your tax burden and hedge against risk. So having someone there who's qualified, experienced, and knowledgeable in the field can save you a lot of time. And I'd like to thank Joe for giving up his time and sharing his expertise here. And if you are interested in getting specific crypto tax advice with Myna or Nephos, then you can contact them directly using the link in the description to this video, which will take you to an online inquiry form. And you just need to add my name and YouTube channel in the box there, just so they know where you've come from. If you do have any other questions about crypto tax or holding this in a limited company, please do add them in the comments to this video, and we'll do our best to answer them in a future video. And if you are interested in more of a tailored approach to your crypto education, and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.